Hello YouTube and welcome to my December 2024 dividend portfolio update. So start of the month we started about sort of 17.2, 17.3%, and then on the Friday I put my money into the market, and we sort of hovered around 17%, which I was quite happy with, which is really good. And then coming towards like the middle of the month, there started to be a dip off, and I did sell a stock out here. But then, yeah, it dipped down to like 14, 15%, and that's where it sort of remained the same. I did consider putting a little bit more money in the stock market, but it was too close to Christmas, so I didn't. I sort of watched it out and we'll see what the new year brings. So we ended up finishing the month on around 15%. So not the best end of the year, but it is what it is. Okay. Looking at the top 10 of my portfolio, so not much change there really. Rolls-Royce is still number one. Oil's made a bit of recovery this month, so both Shell and BP have moved up a little bit. Reality Income's having a bit of a lull at the moment. Reckon Ben Kaiser's still holding in there, and the S&P 500. Gladstone Land's coming up here because I've been pumping money. Well, one of the things I did for 2024 was to try and invest in that every day, trying to cost average down and hopefully get into a profit, which didn't go to plan. So anyway, so let's look at the investments as a whole. And if you want to see how they're performing, just pause the video when you see them when you want to look at. But yeah, what can we talk about this month? What's had a good run? So BA Systems just had a bit of a downward spiral. I'm not sure why, but it's not doing so great. So I've looked, rate return on that's come down a little bit. That's affected my portfolio. Yeah, oil's had a nice little bit of a run, so it's recovered up quite nicely, which is really good because it makes up quite a large chunk of my portfolio. Well, so yeah, Gladstone Land. So with Gladstone Land, at the beginning of the year, I decided that I was going to. I wanted to sell it. I still do want to sell it, but my average share price is like $17.5, $18 or something like that. So I thought I'd invest pretty much daily into it to try and reduce my average share price to a point where it would get into profit. And that strategy was working okay. There was a bit of a dip as the year went on, but the strategy was working okay. And at these 2 points here, it did come in a profit. And there wasn't quite a profit at that point, but by the time this second point here it was in profit, but it wasn't 10%. I thought I'm not selling until I make at least 10%. And then I had this massive drop off, but I carried on investing in it. So I've got my cost average down to $13.50 now. But my losses at the beginning of the year was like £34, and now it's sitting at 96. So I've actually lost another 60 odd pounds in there. I mean, at its peak, I think it was like 120, but yeah, not the greatest of choices, but you live and learn, don't you? What else can we talk about? Not really much, really. That Eagle Eyed will notice there's a new hold in there, but that's going to come in January's video when I get around to doing that one. And in January, yeah, Penning Group's having a really rough time. Like for a year, it's quite down. Just not sure it's going to recover or not. So it's certainly getting a bit of focus from me at the moment, whether I'm going to keep it or try and sell it. Reality Income's had a bit of a dip. So we had this low at the beginning of the year where it dropped right off, and so I decided to pump some money into it, try and get my cost average down, get it back into profit, which happened, and it had a nice little run, and now it's below again. I'm debating whether to pump a little bit more money in there to get that cost average down again, because I really do like that one. It does do really good well on my dividends. So yeah, Rio Tinto's having a bit of a rough time, but it's a cyclical business, and mine is quite down at the moment. So um, again, in the next couple of years, that will recover, and but the dividend's still quite good on it. Rolls-Royce had another amazing year, just keeps going up. But like I say, they're going to reintroduce the dividends in 2025 when we won't find out what they are until they've posted the full results for 2024. So I'm expecting that soon. But yeah, absolutely amazing return on that, and one of my better choices I've made over the last few years. Well, 24 monthly income select. This was a risky one. I did it for the dividends, and actually, it's done all right over the year. It's done me proud, actually. Quite shocked at my um, the share price has gone up, so my rate returns keep as well as dividends. So I'm really happy with that. Hopefully that will continue. What else? That's pretty much it, really. So overall, the year as a whole, pretty solid year actually, and I'm quite happy where I'm at. A couple of businesses I've decided to sell out this year, sell quite a lot of holdings this year, and I think that's going to continue through 2025 as I try and strip the portfolio back because my ambition of doing 100 companies was too much. Okay, so let's get over to the dividends for this month. So this month I invested £280, not 300, and I got in my ISA, and I got £50, 50 pence of interest, with a total interest for the year of £516. So let's see how that compares with dividends that I got. So 3M paid out this month at 80 pence, which is, yeah, once they cut the dividend, oh, once they cut the dividend, it was annoying. Sorry. Phone call there, that's annoying. Right. Unflack paid out 91 pence, which is a good improvement on. Oh, sorry, yeah, 3M. So yeah, they cut the dividend. So they needed to do that. They was in quite a bit of trouble, and they'd set up the lawsuits slightly less than what I thought it was going to do, but ended up cutting the dividend anyway, which was at risk of doing. Didn't fully cut it, but still paid out. So not the greatest, but the share price has recovered because of it. Amflac, that paid me out 91 pence, so good progress on that. AGNC Investments, that's now paid me out £1.67, so pretty good. So over the year, went up another 30 odd pence, which is pretty good. Google paid me out 19 pence, so I'm interested to see how that dividend grows over the next 10 years. Archers and Daniels, still like the agriculture sector in the US is still quite hard, as you can see from Gladstone Land and from the share price of this, but still paying me out dividend, which 82 pence, which is okay. We're going to see how they go in the medium future. There might be one I'll decide cut my losses on and let go as I focus on other things. Got my final paid dividend payment from BAE Systems at £1.30, so pretty reasonably happy with that. BP, so BP paid me out £10.81, which is a massive dividend. But when the oil prices, when their share price started to crash down as it was, I did invest quite a bit of money in there, bought them while they're cheap. So really happy with that dividend return of £10.81. Coca-Cola paid me out 73 pence, which is really good. And I don't know what's going on with my phone. My phone's gone a bit bizarre, sorry. Carry on. So Gladstone Land, so the dividend paid me out dividend £1.66. That is because I have been heavily invested in it throughout the year, and especially when the share price dipped down to like below $11. So yeah, that's why that paid out quite high now. Horizon Technology Finance paid me out £1.48. So quite steady for that throughout the year. I did invest that to get that to £1 and haven't really done anything with it since. So yeah, not too bad. HSBC paid me out as well, £4.09, which is really good. IBM dividends really strong again at £1.58. JP Morgan US bonds paid me out 80p, so not too bad on that really. Bonds have been, I've got quite a few bonds in this portfolio. Sainsbury's paid me out their final dividend of the year, £1.66, so good, but I think I might sell this company to shrink my portfolio down a little bit. Johnson & Johnson, that paid me out 89p, which is okay. LTC Properties, again, been quite stable throughout the year. Not really too much of an increase, which is slightly disappointing, but I think it's more affected by the exchange rate. But that paid me out £1.22. And Main Street Capital had 2 payments in there, so paid me out £1.78. So over the year, again, not too much growth on the dividend front, considering the investment I've been putting into it. But my US stocks are affected by the exchange rate, which is quite high at the moment. McDonald's paid me out 79p. I'm okay with that. And Meta paid me out 31p. So that's quite a good little payback from that. And again, I'm really interested in what these dividends are going to do over the next 10 years. Microsoft paid me out 21p. So I'm okay with that. Pfizer, which I think is quite undervalued at the moment, paid me out £1.81. So this is one stock in 2025 that I might pump a little bit of extra money into while it's at a low price. Both my PIMCO ETFs, they're paid out 92p, 97p respectively. So again, pretty good returns on those. Quite happy for those for the years. PPG Industries, so the chemical sector, paid me out 54p, which is doing okay. Prospect Capital, that paid me out £2.48. Again, this had a bit of a dip. So I pumped about 100 quid in, I think, in that dip. And that's why there's a significant increase in dividends there. But again, reasonably happy with it. I'm not sure I want to keep pumping money into it because I'm not. I've lost a bit of confidence in it, which is disappointing because it has been quite a good dividend payer. But the share price is getting a bit of a hammering over the last 12 months, so I'm losing a little bit of confidence in that. Reality Income, that paid me out £2.59, which is okay. I did pump a lot of money in there, so it is doing well for my dividend income. Nearly at the end now. Let Shell paid me out £6.88. Again, when oil went down, I pumped a bit of money in there, and I'm starting to see that as a returning dividend is really good. Stag's share price has suffered just lately, which is disappointing because that was, or still is, I suppose, one of my favourite holdings. It's just nice and steady. It's always done pretty well for me, but paid me out 46p. T Rowe and Price, that paid me out £1.29. The renewable infrastructure, so I have put a little bit of money in there just over this year because their share price is down. So that paid me out £2.38, so good return from that. And my 24 monthly select fund paid me out £1.36, so again, good return from that. Unilever paid me out 93p. And my Vanguard ETFs now start paying me out this month. So I got from the FTSE 100 one, I got 70p. From my All World High Dividend Yield, I got £1.87. From my emerging markets, I got 25p. From my S&P 500, I got £1.32. And from the UK Gilt, I got £1.30. Sorry, not £1.34. The US bonds paid me out 61p. So this I've actually sold this one now, but you'll hear about that in January. WW Granger, amazing share price at the moment. It's about quite a good dividend at 43p. And last of all, Whitestone REIT paid me out 35 pence. So overall pretty good. That gave me a total of £62.18 for the month, which was what, £12 more than the interest I got. But quite interestingly, little play on words there. The total dividends for the year come out at £506, but my total interest for the year in the ISA come out at £516. So actually, over the year, my ISA interest beat my dividend income. So slightly disappointed with that. Let's do the charts next, and then we'll do the figures for the year. So going over to the charts. It sort of trended out at around £35 a month, with my Q3 results peaking up. So slightly underperformed, I think, from where I thought I should be, but still not a bad year. So definitely start seeing some peaks in the end of Q3 stuff. Top 5 dividend returns. So number 1 is still BP. Number 2 just is AGNC. Number 3 is very close between Shell and Prospect Capital. And then, so Shell's number 3, Prospect Capital number 4, and then number 5 is HSBC. So pretty, there's my top 5 dividend returns. So I actually managed to deposit this year £3,200, with my value being at 16,000. I can't remember what it was. Can't remember what it was on the ISA. So 13.1. So yeah, about 3,000 difference. So happy with that. My rate of return for the year is a bit skew with that, because that works off the actual money I've put in. So it's not really just a metric I like to track. But actually, so the bigger one to point out is the actual return on investment. I run at 20%, which is really good. My dividend on yield on cost was 7.62%, and the value is 6.3%. So pretty good. And I've now had £1,000 of dividends over time. And my capital growth this year actually ended up being just over 1,000 as well. So pretty good. Okay, let's have a quick look at the front sheet then. So the track dividends. So this is the dividends I've had a month, and this is the exponential growth line. So nice little finish year from dividend wise. Hit that growth target where I'd like to see, which is really good. Yeah, and because I had a good run at the end of the year, I'm actually eclipsed 2023 dividends returns as well. So as you can see, each year's having a nice good step. It's about £150 ish a year, £200. So just starting to see that snowball effect now start taking place. And obviously this line is just the rate of return trending. So let's just look over the predictor. So my targets for the year for dividend returned was £450. I actually got 506, so green tick for that metric box. My predicted capital growth for the year was £426, and I actually achieved 1,000, so that was again pretty good. And my fund value I predicted to be 15,200, and I actually got to 60,100. So pretty good. So overall, yeah, I was really happy. Met my targets. Pretty good year. So, but in terms of 50k, I'm still looking at about 10, 11 years. And that's where we're finishing at. Okay, sorry about the video. It's a bit jumpy today. Lots of things happening. But if you have enjoyed this video, please give it a thumbs up. And happy New Year to you all. And I'm looking forward to 2025. Thanks, guys. See you next time.